السلام عليكم. Hi, I am مرحم شباب, Content Manager Secretary in Media Mubashir. You are watching Taking Stock.
After months of will they, won't they, at long last, the FOMC, the Federal Open Markets Committee, finally gives Wall Street the long-anticipated answer of a short-term interest rate cut of 25 basis points. Maybe not the bigger cut of 50 basis points that many market participants have been hoping for, but regardless here, crucial day here on Wall Street to track the market, major market indexes, response there to the FOMC. It does appear as if we are off session lows as we are heading into the close with about a minute left. Welcome to the show, folks. This is Taking Stock. I'm your host, JD Durkin. We are just moments away, one and all, from the ringing of the iconic closing bell right here at the New York Stock Exchange. The team from Garmin set to do the honors. A scorecard to give you a sense, the top performing sectors in the S&P 500 after getting that FOMC decision include financial, staples, and energy stocks. The biggest laggards in the S&P include industrials, tech, and discretionary. As for those key Dow 30 components, we track the household names, Amex, Caterpillar, Visa, the top performers, while the laggards include names like 3M, Amazon, and NVIDIA. Coming up on the show, we got Chris Versace here on deck, the CIO at Tematica Research, ready to kick things off, give us his perspective for what he and other market participants saw in the reaction. Time now, the folks, team from Garmin, ticker symbol GRMN here at the NYSE, set to do the honors. And with that, the team from Garmin officially doing the honors here at the New York Stock Exchange to ring out not just any average Wednesday here on Wall Street, a Fed day nonetheless. We always say, Chris, you got to wait till the three gavels, because sometimes I start talking a little bit early. Looking at the tail of the tape here into the close, the S&P 500 closing down 0.1%. The Dow Jones looks like it's going to hold on to fractional gains. Comparable story for the New York Stock Exchange Composite. And the small caps eking out in positive territory, up about 0.2%. Chris Versace is the CIO at Tematica Research. He's also a very good friend of mine, folks. Thanks for being here, my man.
Happy to do it.
Let's get your top line reaction to what we saw out of the cut and any forward-looking guidance from the chairman of the Fed today.
I think the Fed kind of delivered what I expected, underwhelmed the market a little bit. They revised their forecast, 4 rate cuts between now and the end of 2026. The market was looking for a total of 6. But again, given what we've seen in the market leading up to this, where the S&P 500, NASDAQ have moved demonstrably higher, NASDAQ Composite was technically overbought based on its RSI level. We look at the sea of economic data. I think the market was understandably ahead of itself in terms of the number of the rate cuts it was looking for. Now we've got a period of digestion.
Yeah, we also got the summary of economic projections. We love calling this the dot plot.
Correct.
Affectionately, what did you see and what did we learn in the projection that the Fed is expecting for the path moving forward?
So they do expect to deliver, one more incremental rate cut than they did back in June, but they upgraded the economy and they continue to see inflation being relatively sticky. So you kind of have to beg the question, why did they cut? Why did they upsize the number of cuts that they'll be delivering by just one, over the next couple quarters? And it really ties back to the weakening employment market. We've seen, much lower job creation in the monthly jobs report. We had that big revision, and I suspect what the Fed is doing is trying to front load some cuts, maybe spark the economy, keep the employment market going, because remember, that's 1/2 of their dual mandate.
Yeah, absolutely. Are you surprised to see the Fed put much more of an emphasis, at least over the last 6 months or so, on that other side of the dual mandate, the potential for a deterioration or at least a slight weakening of labor market conditions?
I think if it was just the monthly job numbers that we got in June, July, and August, which were revised, we may not have seen the Fed do as much. But when you lose over 900,000 jobs for 12 months ending in March 2025, no matter how you slice it, the employment market is much weaker than previously expected. And I think that was the tilt factor that led to what we saw today.
Yeah, I know this is the type of stuff you and I talk a lot about. Just pretend I haven't asked you this. What are the most important pieces of data for a very data-dependent Fed as you look at the last two remaining FOMC meetings, one in October and one in December?
So the broad-based buckets are going to be obviously whatever data we get on the employment market and whatever we get on the inflation market. But I would say we also have to take into account the overall speed of the economy. So for me, that means we'll be digging into the flash PMI data. In fact, we'll get the next one next week, and that'll be for the month of September. We're going to be getting the ISM manufacturing and services PMI data, a truckload of information, not just the headline numbers, but new orders, export orders, employment, and pricing. So those are very critical data points for me. And of course, whatever we get on the jobs front. But again, we cannot solely rely on the employment report. Our job as investors is to triangulate the data. What does that mean? Yeah, we'll look at the employment report. What does ADP have to say? What are we seeing in those ISM reports I mentioned? What is the Challenger job cuts report telling us? Because not only do they tell you job cuts, at the very end of the report, they will talk to you about hiring plans. So that's some of the data to look for.
All right, we've got less than a minute left. How about other maybe non-economic data catalysts that are on your radar or something you're paying attention to, Chris Versace, you think the rest of us should also pay at least a little bit more attention to?
So I would say, just given where we are, questions about the consumer, one of my plans is always to follow the money. And what do I mean by that? Let's look at where consumers are spending. Let's look where enterprises, companies are spending. When you do that, it's very clear that the AI data trade, I hate to call it that, but that is very much alive and well. But when you're talking about the consumer, we see them increasingly being cash-strapped, trading down. Talk about your Costco's, your TJX's, where they can stretch their disposable spending dollars. Other catalysts to watch on the horizon, I believe we have an Amazon hardware event coming up, and tonight we have a Meta event as well.
Yes, we do. All right, Chris Versace, the CIO at Tematica Research, head of the Street Pro portfolio. My man, thank you for being here as always.
Thank you.
Good to have you. I'm going to hand you that. Howie, you and I are going to go for a walk. We're going to do our best to get through the crowd. Excuse me, everyone. Pardon me, everyone. Ian Owens here continues to be the absolute best dressed person in the New York Stock Exchange community. Ian, thank you for, Ian got a close up on that one. How we're going to go right through the crowd. We're going to talk about a few really key NYSE notable companies. Obviously, sometimes during this portion of the show, we like to talk about earnings. We're kind of late on earnings. How we'll start with a look at Walmart here. Shares finishing up well off their session highs, still up about 0.8%. This after B of A Securities increasing its price target on the stock from 120 up to 125, maintaining its buy rating. The company calls Walmart an emerging agentic AI leader. The stock is up 30% off of its April 7th lows. Howie, let's take a look at the big one here for the New York Stock Exchange today. A fresh IPO, a long anticipated IPO for the team over at StubHub. It did fall relative to its open about 6% or so. The company raising $800 million in its IPO today with an offering size you can see there of about $34 million. It opened at $25.35, delayed its IPO from April. You can see there on the screen the lead underwriter for this anticipated IPO, the team at Goldman Sachs. FinTech TV's Patricia Wu sat down with Value CEO Waleed Hassouna at Money 2020 Middle East in Riyadh. Take a listen.
Welcome to Money 2020 Middle East. We're here at the Riyadh Exhibition and Convention Center, and we're delighted to be sitting down with Waleed Hassouna, CEO of Value.
Hello, hi, how are you?
So, just looking around the convention center, there's so much buzz around the fintech landscape. Tell us about the state of fintech innovation here and your company's role in the growth.
I think fintech is one of the most important and exciting topics, not only in the region, but worldwide. The region also has been growing at a very fast pace for the past few years. When we started in 2016 and 2017, most of fintech was actually in payments. So companies in payments were what we call fintech. And that included, by the way, Visa, MasterCard, and other players. But to be really honest, once we introduced a new vertical in Egypt for lending, and lending to consumers, trying to mimic the buy now, pay later trend at this time everywhere in the world, this was a major change to fintech. Because with lending, it becomes a different ballgame completely. Everyone is interested to look at How can you lend people? How can you use technology? How can you underwrite customers? Is there going to be a role for AI or not? And everything was like moving very fast after that. So we've seen another buy now pay laters coming out from Saudi, coming down from UAE, from Jordan, everywhere. And then we started to see another companies coming in in RegTech, because like the regulators, all the rest has panicked from this new products and they wanted to regulate it. So we started RegTech, we've seen InsurTech coming out, cybersecurity, everything. So I think always it started with payments, and now there are like multiple verticals of fintech that we can see right now.
Right, building on that, you have so many companies coming into this space. The competition is fierce. How do you stay ahead of both regional and global competition?
For us, I think the reason we've been able to be the market leader in Egypt, despite we're competing with 49 companies in our space, is innovation. So it's very important to have new products, and those products need to speak to the customers. So if you listen to the customers right, you're able to build new products. Second thing is, we have always built the company on speed over accuracy. So we want to do very fast, very fast products to the market. And if it's not nice, it didn't work, we can roll it back. But we want always speed over accuracy, because we wanted to be ahead of the curve when it comes to product depth and product width. This is one thing. Second thing is, we are, with the exception of me, the average age in the company is in the 20s, including leadership. So we are able to speak the right language for our customer segments, and we are able to use technology in the right way. Also, most of the people working with the product are bankers. So they understand banking, they understand finance, and then everything. Most of the companies that we have seen in the region and in Egypt, when they do fintech, they are either very fin or very tech. But the problem is, if you don't, that you're missing one part of that. Because this company actually was built as a corporate innovation from inside an investment banking team. So banking and tech were equal in this equation. And that's why we stay ahead. We have a good banking team and a good tech team.
And you mentioned your customers, and I understand, I think you said 50% of your customers are unbanked. That's pretty significant. What kind of impact does that have on your
That's
growth?
very important too. So I can talk about the impact and raise money based on impact, but the reality is that competing on the banking population will come with very thin margins. So any company in a country like Egypt or Pakistan will always need to look at the unbanked population, because this is where the growth is going to happen, and this is where you have an advantage over the bank. Especially we are in lending, so lending depends highly on your cost of funding. And basically the bank will always have a cheaper cost of fund. So if we compete on the same customers, they definitely can offer a better pricing for them.
Welcome back to Taking Stock. We are continuing our live broadcast here from the trading floor of the New York Stock Exchange. And now at this time, we want to bring you yet another look from Money 2020 Middle East. This time an interview straight from Riyadh with InDrive's KSA country manager Abdul Raham Basim. Take a look.
Welcome to Money 2020 Middle East. We're here at the Riyadh Exhibition and Convention Center. One of the most fun things about this job is learning about all the different companies that are represented here. We're going to learn a little bit more about InDrive. I'm joined right now by Abdul Rahman Basaloom, the country manager for Saudi Arabia for InDrive.
Yes,
Welcome.
hi. Well, thank you, first of all, for the introduction. And I'm glad that we're hosting such events in Saudi Arabia to meet such people as you. So thank you.
Yes, it's been really fun just learning about all these different companies. So we want to hear some more about InDrive, especially since you recently launched in Saudi Arabia.
Right. So InDrive is a ride-hailing company that is globally distributed. We are in 48 countries, and now we are entering Saudi Arabia as the 49th country. So what InDrive is it's a peer-to-peer service. What we have done for the sector is that we have innovated it a little bit. So the customer can actually order the driver and can choose the driver. And they can also have the freedom of the pricing range that they can pick. So when the customer chooses the ride, they can choose the pricing, and based on it, it will go to the captains, and then the captains can have three choices: either to cancel it or not accept it, or they can accept it, and the last choice they can negotiate with it.
Oh, you can negotiate. That's different.
Yes.
How does that work, and how does that power of choice impacted your company and its customers?
Yeah, so we understood once we have launched this idea is that it's really popular, and we thought it's going to be popular for like certain regions, right? But funny enough, we are in 48 countries, and all of them say the same. Like, people love to haggle prices and negotiate. So for me, in the beginning, I thought it's going to be excellent for Saudi Arabia customer base. But obviously, it's working for the whole network. So that's great.
That is great. So, you know, with fintech these days, mobility is key, right? How are you approaching that integration?
Right. So for Saudi Arabia, actually, we have empowered the fintech side of the business. We have started with the cashless payments only, and we have seen promising results that is encouraging other markets. So we have integrated the cashless since the beginning when we started Jeddah. And let me just say some flash news. We are actually launching Riyadh during the Saudi National Day, which is going to be September 23rd. So what we have noticed is that a lot of people here are using cashless payments, and that's where the fintech side comes in. And now we have mastered it for Saudi market, and hopefully we can expand it to many other markets with this much aggressiveness, basically.
Money 2020 Middle East from Riyadh is brought to you by GFT, Ethos DeFi, and Avrio.
Welcome back to the show. This is Taking Stock. We are still live down here on the iconic trading floor of the New York Stock Exchange. We'll now bring you also yet another look from the ongoing conference of Money 2020 in Riyadh. FinTech TV's own Patricia Wu sat down with Standard Chartered Group Chief Data Officer Mohammed Rahim in Riyadh. Take a listen.
Welcome to the inaugural Money 2020 Middle East. We're here at the Riyadh Exhibition and Convention Center. Now, you know, we cannot have a conversation at one of these conferences without talking about the power of data and AI, and I've got the perfect person to break it all down for us, and that is Mohammed Rahim, the Group Chief Data Officer for Standard Chartered Bank. That is a big, big job.
It is indeed. Thank you for welcoming me, Patricia. Much appreciated.
So you've been here at the conference talking about the power of data in finance. How are you at Standard Chartered leveraging this power?
So one of the biggest changes we're making is actually we're learning from you as journalists around how to use data and the power of data, and that is telling stories. Because data is only good when it applies the right context. So for example, if I take your name, Patricia, your name is probably irrelevant to someone who just does accounting and wants to reconcile numbers. But your name is extremely important to someone who does financial crime and money laundering detection. So what we're starting to do is we're trying to take data, apply context, but more importantly, tell stories with data. Because people don't remember facts, they remember stories, right? So my go-to phrase as I move forwards is, don't tell me the facts, tell me the story. So data is only as good as the story you can tell with it.
Ah, that's so true, because you think of oral tradition, right? Humans, that's how we learn things, was telling stories. So why is that so important? How are you utilizing these stories?
So it all started with a quote I remember from Maya Angelou, which is, you'll forget what I said, you'll understand what I teach you, but you'll never forget how I made you feel. Stories make you feel something powerful. This is why we love Hollywood. So what are we doing? We're not making everything into Hollywood, but we're trying to understand our customer journeys and being able to tell stories through customer journeys. Why is a customer wanting to spend money in a certain way? Why do they spend money at a certain time of the month? Why is it always concentrated at that time? And then there's a lull period. So we try and understand patterns, but not just understand the pattern. We tell the story. And the story isn't just what it means for the customer, but what it means for the entire industry. For example, what risk does that manifest to the economy when the customer is just spending at the same time? What does it do to our system volatility and stability to be able to manage that system when the customers are transferring money at that same time? So it's about understanding the data points, extracting those data points and tell that story at a broader perspective. That's how we're trying to change the way we use data.
Ah, so it boils down to that human connection, even though we're talking about technology.
Yes, yes.
And I guess the same with AI.
Absolutely. So in my talk yesterday, I talked about 3 stages of AI. Narrow AI, artificial general intelligence, and super intelligence. But then I ended that by saying, what's really important is we move into the era of human super intelligence. Why is that important? Because today AI operates in one domain. It's either ChatGPT or it's a driverless car. ChatGPT can't drive your car. Whereas humans are multi-domain. You can drive a car, you can write an email, and you can cook your dinner. Now what we need to do as humans is we need to learn more multi-domain skills. So for example, if you're a researcher, you're very good at research, but are you also very good at telling stories? So humans need to learn to have mastery in not just one subject, in 2 subjects. And that's where we can leverage AI to become masters in more than just one subject. And that's how we're going to become smarter and interact with AI in the right way as we move forwards.
All right, one and all, welcome back to Taking Stock. We are still live down here on the trading floor of the New York Stock Exchange, and joining me now is David Struzeski. He is the CEO of Sound Planning Group and a very, I do mean very, good friend of ours here at the Stock Exchange. My man, thanks for being here.
Pleasure to be here.
Of course, and great to have you on the show and on Fed Day nonetheless. David, what did you see and hear for the FOMC today, and was that in line with your expectations on the day?
Went exactly as planned here. Quarter point drop. Powell's not going to make any big moves unless there's something that actually breaks. Now, we've got a dual mandate with the Fed, so they're looking at unemployment, which we just had 911,000 job revisions. So they definitely got to cut because Main Street America is not doing very well, but ultimately the inflation numbers aren't looking too bad. I personally track Trueflation.com. We're looking at about 2.5%, a little less than that actually, on the actual inflation numbers that people are spending real money on. But remember, that's just the trajectory from here. It's not going back down to where we were before. So again, Main Street is really hurting right now.
For a data-dependent Fed, which you know Chairman Powell and his colleagues like to say they are, there's no shortage of data points month for month. We got inflation prints, we got job prints, we got unemployment figures. Are there certain points of data that you follow more closely than others?
You know, you got to look at the unemployment, but you're not looking at the headline numbers. You got to look at these annualized numbers. I also think CPI is CPI because it has nothing to do with anyone's individual expenses, okay? So this is why Trueflation has those 30 million different data points, and it gives us a much better understanding of where things are going and how things are doing. But ultimately, the economy right now, it is cooking. Good things are happening. Wall Street's doing amazing, but Main Street is not doing as well when we're looking at the housing numbers being most unaffordable time, at least in my lifetime. It's a lot cheaper to rent today. So with these higher inflation numbers and interest rate numbers, I think, you know, the Fed is just holding tight right now until there's potentially an issue, and ultimately they got to cut.
I love the fact that you're underscoring that separation, that disconnect between Wall Street and Main Street. What more about that reality of sort of this kind of bifurcated economy right now, if I can say it, between the haves and the have-nots,
Sure.
do you think we should be paying a little bit more attention to?
Absolutely. Well, I think unemployment's an important one. So if we're looking at the high-end numbers, a lot of jobs are getting let go from like Amazon and Microsoft and Google and all these other places. But, you know, 7-Eleven's having a hard time hiring people. So the average jobs, difficult to hire for. And then people are getting let go of these really high-tech, expensive jobs. And so, you know, the economy's changing. AI is going to ultimately, you know, really radically change things in the next 3 to 5 years. And so, you know, my hope here is that we can, you know, get this thing just right and we can ultimately transition to the next steps.
I'm about out of time. 2 FOMC meetings left, October, December. Your expectations for the rest of the year?
Maybe a quarter point, unless something breaks. I think the banks actually probably have a lot more of a challenge in front of them than we're expecting. If you look at the numbers of gold and silver right now, they actually really hurt the banks when the U.S. dollar is declining in the same way. So it takes more U.S. dollars to buy 1 ounce of gold. That's called inflation.
David Struzeski is the CEO at Sound Planning Group. My man, thanks for being here as always. It is great to have you on the show. Folks, that's going to do it, but not before we give a very special one and only birthday shout out to Jeremy on our production team, the great Jeremy Caston. And the crowd goes wild. Does not look a day over 21, my man. He does it all. Hope you got a nice concert coming up in your future. Folks, that's going to do it. 9 a.m. tomorrow morning. Kristen Scholler and Remy Blair for NYSE TV Live and FinTech count you down to the open, respectively. That's going to do it. We'll be back with a whole new edition of the show tomorrow. I'm JD. This is Taking Stock. We'll see you tomorrow.